Yes, the stock is in focus. Remember, it reported its numbers just an hour ago, and the stock saw a sharp decline as soon as it reported its numbers, and the stock, even as we speak, is down over 4%. Net interest income saw an uptick of about 64% on a year-on-year basis. Provisions, meanwhile, saw a decline of about 2% on a sequential basis. They came in at 1879 crores versus provisions of about 1912 crores that the company had reported in the previous quarter. As far as the asset quality is concerned, gross net NPA stood at 7.66% this quarter versus 8.51% that the company had reported in the previous quarter. All in all, numbers look good, but despite that, the street is clearly not happy with the kind of numbers the company has reported, over 4% lower in trade as we speak after it reported its numbers.
Absolutely. You're seeing a 4% downtick coming in the stock. But to understand more about, the provisioning, how is it going to be impacting the NIMs of the company as well, we are today joined by the management of the company. We have A.K. Gupta, the Managing Director and CEO of Bank of India, joining in with us this afternoon. Firstly, Mr. Das, thank you so much for joining in with us and a very good afternoon to you. Now, obviously, I want to start talking about the provisioning. Now, the provisioning has actually continued to remain elevated. So, what is actually leading to this elevated provisioning? Could you give us an understanding on that first?
See, as regards provisioning, I think our provisioning on bad assets, they have gone up only because of aging. That is one fact. Otherwise, there was no strain on provision as such. And I can tell that in standard asset provisioning, we are showing about 800 crore. But I must mention here that as mandated by Reserve Bank of India, we were supposed to do it in a staggered way, provisioning on standard accounts as per the June 7 circular. We were given a dispensation of 3 quarters. We did the first part in September, and another 2 parts of 440 odd crore was supposed to be done, totaling 900 plus in December quarter and March quarter. What we did is we did the 2 quarters provision in 1 quarter only. That's how it's looking elevated, so that it will safeguard our March P&L. So we had time till March, but we did entire provisioning in December itself.
Okay, so 2 quarters provisioning done in 1 quarter. Hi, a very good afternoon, Mr. Das. This is Shri joining in. Just to follow up through there, that can we therefore meaningfully lower the provisioning number for the March quarter? Is that what we can expect?
Absolutely, absolutely. Our slippage numbers, as you can see in the presentation, our slippage percentage is about 0.3%, 0.27 to be precise. And our recovery also has been good. Almost 600 crore more than the slippage numbers. So that way we don't see much of a strain. Our SMA portfolio is under constant monitoring. So our plan is to bring it to 10,000 crore maximum SMA portfolio. That plus certain amount of write back, where in standard accounts we have already made provisions. If the specified period those accounts perform alright, we will have a huge write back opportunities. So going forward, net, I think provisioning strengths will not be there.
Okay, Mr. Das, but I have a 2-part question actually coming in for you, and this is on the deposit growth, which has remained muted. Now, is that a concern given that the strong credit growth, and second part is, do you expect the deposit rates to go up to aid this number mainly going forward as well?
Yeah, liquidity or rather lack of liquidity is a common concern across all the banks. So Bank of India is not there alone. So we are conscious of that fact, and that's how we have during last 2 quarters we have tried to reprice our deposits and garner additional resources. Our CASA franchise at 44.56%, I think it's one of the best in the industry, I should say, amongst the PSBs. And it has not seen much of an erosion. And yes, our ALCO will review things from time to time. We have started a new special deposit scheme also. I think that's having good traction now. So going forward with a LCR of more than 130-140%, that should not be a problem. Yes, liquidity concerns will remain for some more time, but we are exploring other revenues like refinance, etc. So that should not be a problem. I am getting a point from the fact that our credit deposit ratio is about 77% plus. Yes, we are conscious of that, and we are trying to strengthen our liability franchise further.
Okay, but Mr. Das, moving on to the loan growth, the number has been strong this time around, and especially the MSME lending is up in a solid manner. Sequentially, we saw a jump of around 5%. So what is giving you the confidence to lend in MSMEs?
I think everybody is aware that post-COVID MSME was probably the last to make some recoveries. It took little time, but at the same time, we also try to have better traction at the ground level. We have launched new schemes like welcome offer and several other schemes to prop up MSME loan book. It was lagging much behind the other two components of RAM, and this quarter marks a beginning. That December quarter marks a beginning of revival in the MSME growth. We almost achieved our targets, but I think by March, as the recovery process gathers further momentum, MSME system as a whole, sector as a whole will be up and going. I'm sure this momentum will continue. And that has given us a good leeway in broad basing our advances growth.
Right, Mr. Das. One more thing is that a corporate large bank has actually indicated that there is some level of mispricing. So, where are you seeing growth, and what kind of competition are you actually witnessing now?
There are two aspects. One is there are few specific segments where there has been improved traction. So for example, textiles, chemicals, basic metals, construction, where the activities have started picking up. So there we have got fresh sanctions done. Second, what was probably lacking hitherto was very low availment of ODCC limits. I can give you for example, 64% was the average availment of our ODCC limits. As of December, that 64 has gone up to 69%. So 5% is a significant jump. Going forward, we feel I think that will, as the economic activities pick up further, and this is the last lap of the financial year, a lot of activities will happen. We believe it will go up further, and our corporate segment also will continue to grow along with the RAM segment.
Okay, Mr. Das, we look forward to that. But a question on numbers, because if we see ROAs are above 0.5%, so what is the next target for Bank of India now?
1%, the global benchmark is still little far away for us. We will like to go step by step. As our yields improve, our NIM you would have seen has improved year on year by about 100 basis points. And the global NIM of 3.28 and domestic NIM, where 87% of my loan book is there, it's about 3.74%. So, churning of assets, selection of good high yielding assets. We have deliberately refrained from taking government guaranteed advances where the returns are very low. So going by all these things and the trend, I believe 0.7 to 0.75 should be our target for March ROA.
Right, and just a question on NIMs, that is up by 25 basis points on a quarter-on-quarter basis. So is this actually sustainable as the deposit rate goes up, and where should one actually see it now?
There will be some moderation obviously, because as I have told earlier, the liabilities take little longer time to get repriced and manifest themselves in the P&L. So the deposits rate hike has happened during the last 2-3 months, and since those will be applied only at the renewal stage or the closure stage, I think some moderation in NIM is inevitable for every bank. But I believe we will be able to maintain our domestic NIM between 3.25 3.30. We will be able to maintain that, and if we can maintain the global NIM of 3%, which we are targeting, that will be good enough.
With this, we'll let you go, Mr. Das. Thank you so much for joining us today on ET Now and helping with the outlook for the growth of Bank of India going ahead, where he mentions that the liquidity problem is expected to continue for some time, but a good number targeted when it comes to ROA as well as NIMs for the company. But with this, here's the time to slip into a short break in Market Parapet, but don't stay anywhere. We'll be right back.